Hey everyone, it's Rob. Hope you're having a fantastic day. Let's go ahead and make sure you all can hear me. If you would please type the number one in the chat box so you know that you can, I would greatly appreciate it. Hey Tom, very much appreciated. Afternoon, Jim. All right, you guys should be seeing my screen. There will be no video today, guys. Insane day. My daughter just got out of surgery, and it's just been a runaround nutty day for me for sure. Hey, Helen, good morning. Thanks, Andrew. Surgery went well. Everything is good. I literally just hung up with her about 30 seconds ago. Oh yeah, it's the wrong PowerPoint, isn't it? It's not. Okay, there we go. Good catch. Who was that? Andrew, thank you. Let's go here. I opened up the wrong doc. Don't want monster market movers, that's for sure. All right, that should be more better. Hey, Andres, thanks. As we get started, keep in mind everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something, anything you like, make sure it fits your own personal risk profile and risk tolerance. All right, so we've got a lot of happenings here, guys, but we're going to get into our agenda first. Follow us page will come up next. We'll look at today's trades, then we'll go into economic reports. We'll go into a review of the market, upcoming trainings. We'll hit our weekly training topic, and then your stocks in review will be next from there. So make sure that if you do have a candidate, guys, or if there's something you're considering, let me take a quick look. The worst thing that happens is I agree with you, I disagree with you, whatever it is, you get one more set of eyes on it before you make that final decision. All right, so here's our follow us page. Make sure you are following along, right? There are nuggets of gold every single day, like in our trading post. Every single day inside the trading post, there are nuggets of gold. That is a separate training. Let me just close this down. I don't know how that opened up. That is a separate training, not training document that you've got to register for. It is not part of an automatically email you because you're on our list. You've got to say, yes, I want that. We've got a couple thousand people on that email, and it goes out every morning with top stories, top news, tradable things that are out there, and the likes, right? Things that many of them you might not have even considered prior to seeing it. So, all right, what's next? All right, today's trades. For me, I didn't get a whole lot off today. I didn't get anything off today because of my daughter's surgery. So that was not a thing for me, but I do have some trades from last week that I want to talk about. So what trades did y'all do? Drop them in the chat box. Hey, Robert, how you doing, my friend? Great to see you. All is good. Yes. I hope for you as well, Robert. All right. So Jeff said NQ, $316.33. My God, how great is that? Right? 33 seconds, $316. Wunderbar. I love it. That is outstanding. Um, so let's see where are we? Let's go to a much shorter time view here. We don't need that big. Let's go actually here. Want that. Let's get rid of these green lines. There was some training over the weekend. Trip said tough morning, expensive options from earnings, upcoming FOMC and US China trade deal. Broadcom 24% in 5 minutes. Amazon 6.5% in 5 minutes. IWM as in Mary 22% in 2 minutes. However, fewer contracts since prices were way high. So yeah, so I know what Trip normally does as far as contracts. So much lower numbers make sense with everything that's going on. And I mean, look, all-time high is a freaking understatement. Look at the gap up today, which is everything's going to be expensive. Market makers don't know if this is going to last. It's not going to last. Is this a breakaway gap? Is it a continuation gap? Because we had one on Friday, right? We had a gap up, another gap today. Is it a continuation? It is a failure gap. What is it, right? We've got to see. Obviously, we don't know that yet. But market makers have to be concerned. So what do? They jack up prices. They increase bid-ask spreads. They jack up volatility. Yeah, Tripp said huge pop in futures right at Sunday open from the U.S.-China trade deal. Yeah, and then Trump's there now, right? I saw he was in Japan, I think it was. I saw on CNBC this morning. I think it was Japan. That he was talking to I think it was the prime minister. I don't remember, or the president. I don't remember. Um, of who it was, but then off to China, and they feel confident that they've got this thing figured out with China, which would be absolutely amazing. No matter what, I do not believe for a second that we win on the tariff deal with China, meaning if China charges us 20% tariff, if that's what it is, if that's what we pay as a country, I don't think we get 20% from them. I think they have to come out ahead of the game for there to be any game at all. I don't think there will be any chance of that happening. Now, if Trump is that good and gets it done, awesome. But I don't see it. But just settling it is huge. He did sign three rare earth mineral deals as well yesterday, I think it was. So that's good. Heading into China, that gives us a little bit of leverage there that we may not need as much from them. But he did get that deal taken care of, and that's my biggest concerns: rare earth materials, the stuff that's used for AI, medications. Those are my two biggest ones for me personally. That I'm not worried about the stuff that comes out of Alibaba and I can get it really cheap and so forth. It's funny, we had is Amelia in here? She is. So we were talking before, and Amelia said that she was looking at something over the weekend on Etsy, and it was fairly inexpensive, $35 or something, but it was coming from out of the country. It was $200+ for shipping. For the shipping of it. Okay, welcome to tariffs. Our trips at Australia is on board with the U.S. for rare earths as well. Yep. Yeah. So look, there's a lot of things that we need to solidify, and it's great to be political, but I'd rather be locked in, right? I'd rather, instead of saying, yes, we will take care of you, I'd rather be, no, let's get a deal on the table. This is what you're going to do, right? That gives me a lot more comfort, a lot more solace than anything else, okay? Um, so trades from last week. So here's the ones from the end of the week, right? And these were, when I say end of the week, we'll do another pop tonight, but this was on the 21st, 2nd, and 3rd. So that's Tuesday, Wednesday, Thursday. So the 21st, here, let's just start at the bottom, which was CrowdStrike. That was the most recent one. We did a 10 contract trade on that. Wasn't a big move. We got in at 508 and a quarter. We got out at 522. Isn't that, oh, wait a second, that was a big move. This is one contract. It's not 10. So I chose to not show you the full document today. And what I mean by that is I'm not hiding anything. I did not want to show you the document that says we did 10 contracts and made $10,072.50 or whatever it was, right? I didn't want to share that document. Just look at the stop quantity right here. Just because of the way the sheet is compiled, it has to be a 10 or a 4 here, right? Because it does different things based on what's there and different things based on what's in the bullish and bearish column. So all of them were one contract. So CrowdStrike came in, we got in at 508 and a quarter, we got out at 522, which means on our full contracts was over 10 grand. So if that was on the 23rd, we go to CrowdStrike, show WD. Let me get a crosshair. Or is it? My screens have moved around a little bit. So here's the 23rd. So if we go back and look at the 23rd, which was Thursday, right? Thursday. Yep. So right in there. Okay. So let's go look at 5-minute candle. Let's go look at the 23rd. We broke out, closed up here, retested, next 5-minute candle bounced. Life is good. Life is good. What a great day. We're out near the close of the day when the stock hit about 522. So that, of all of them, was our biggest profit trade of all. We did a Coinbase trade on the 22nd. And guys, this is me sharing everything that we do across the board. We don't hide anything at all, right? So here was the 22nd, right here. We got down, and how did we do on breaking out on the 22nd? Let's go look at a 5-minute candle from the 22nd. And we're looking for the break to the downside. We broke down here. Here's resistance. 326, we'll call it. We closed on this candle right there at 324.60. We stretched all the way back up, went above it even, retested, failed, and there's the entry into the trade. If we just give it a little more time so you can see the full day, there's the entry into the trade, okay? We were out of that one. We got in at 325. We got out at 320.30. Bearish trade, the letter D, right? D for bearish. It says it right here. You can see what's there. Let's make that a little smaller. Okay. Then we go to Broadcom. That one went against us. We lost $23.40, which was, $230, $234 on our, no, actually it was only 4 contracts on the full trade we did. It was an aggressive entry. We took a bearish entry in a bullish market. So let's go look at the 22nd for a bearish trade on Broadcom. Let's go here for Broadcom. Right, and we have 22nd. Right, so let me shorten this up a little bit. It's easier to fit on the screen. I can see more and actually. Okay, so 22nd is right here. Okay, so we broke through resistance, right? So we gapped up and opened right there. So let's go look on the 22nd and see what happened. 21st, 22nd. We failed right there. We failed. We came back. We retested 11 o'clock and we failed. Trade taken. Well, by the end of the day, we didn't get stopped out. Not stopped out. We didn't hit our target, right? Didn't get anywhere near our target. And my target would have been all the way down here. But the overall move happened very quickly. It failed very quick, retested, dropped. Why would I not take that trade? You have to take it. This one here would have been a no because that's 12:30, 12:20. But no, it would have been lunchtime. I wouldn't have taken it. But this one, we don't have a choice. We have to take that. That came in on the 11:10 candle. If it's before 11:30, we must take it. It's funny. I put together, and for those of you in Pop, you're going to see this soon. It's in beta test right now. I put together an AI for Pop. We took all the trainings that we've done. We transcribed every one of them. We dumped them into an AI. We had additional documents that I don't share, just other stuff internally that we use. And we trained with it into the document. And now you can go in, and you will be able to go in and type in questions of explain the system to me. How do I identify a candidate? What does the entry look like? What does the management look like? What does the exit? What's aggressive mean? What's bias mean? What's a fibit? All of that type of stuff. Okay. When you look at the rules and you ask you to explain the rules of the system, it tells you the why and how we take the trade. So what I mean by that is it will tell you that based on a strict series of rules, we have to take every trade that sets itself up. This is not about, Pop is not about finding the perfect system with the best set of rules in it. It's about finding a system that I can teach you, that everybody can learn the same way. And there is none of the, why did you get out there, but I got out here? I may have taken my trade off as we bounced over here on this, but I couldn't do that in Pop because we have to follow the rules. It didn't hit our target, which would have been further down. We did not break above resistance, so we weren't taken out. And we were finally taken out by 3:45 in the afternoon if it didn't hit a target. That's how it works. Pop is not meant to be, are there better rules? Yes, there are. But this is where you learn a system first, and then I show you how to tweak it for you. It also walked in, it was interesting, it also went in there and said, okay, in month 0 to 1, this is the expectation. In month 1 to 3, this is the expectation. In month 3 to 6, this is the expectation, right? In other words, what you should be doing, where you should be at, how it works, and so forth, right? So I'm showing you what the system gave us. Now, if you looked at that and go, it was a little bit late, I probably wouldn't have taken it. That's okay. You don't have to. The rules say in Pop, we have to take it, right? But just to be clear, we're up $145,000 on one contract this year. I don't remember the number. There's 4 trades here. Let's see. We got to take away the first 3 lines. There's 332 plus 4, 336. So we got 336 lines minus 3, 333 trades so far this year. Are you going to take all of them? No, you might look at an APP and say, I'm not paying $30 for an option, $25 for an option, $22 for an option. That's fine. You don't take that one. Right? I'm not trading Broadcom. It's too expensive. Or Booking rather, not Broadcom. Booking is too expensive. We were trading Chipotle and XYZ. They're too inexpensive. I won't trade those ones. That's okay. You don't have to, right? APP was the last one, and that was on the 21st. Let's resize that. Let's go look at APP. Again, more expensive stock. Wasn't when we started out with it. It was 300. Now it's over 6. 21st was right there. So let's go look at the 21st candle. You can see what the daily looked like for a bearish setup. Here it is. We failed, we moved back up. We failed, we moved back up. We closed right there, but we popped. We finally closed down here. We retested. 1125 was the entry, the last candle we could have entered on. The last candle we could have entered on, right? So we took the trade there. It retested again through lunch, failed a little bit throughout the day. And where we got in at 560.30, we got out at 552.60. Right? On one contract, $600, 10 contracts is $6,000. So why am I showing you this? Guys, you don't need a lot of contracts. The fallacy of the myth of I need to have a lot of money in my account to trade with is just that. Not only is it a myth, in many cases, it's disastrous. Because having more money in your account doesn't mean you'll make more money. It means you have the opportunity to lose more money. We don't need to get into that, right? You trade one contract, you get really good at it. And even when you guys that have pop, when you see this, and I can't give you a date on it yet, guys. We're still training it. We've already switched. We're on our second, maybe third AI model that we're using because we're finding better results by using one versus the other. And you're using my AI, by the way. You don't need AI for this. This is my AI. So you will go in there and you will use my chat GPT or my Claude or my Perplexity or my whatever we're using. You'll be using that of mine. You will not have to have any of those to do this. You should, but you won't have to. All right. So overall, for those 3 days, Tuesday, Wednesday, Thursday, we're up $2,000 on one contract, 145,055. Did we make more on the full contract trades? Yes, but I chose not to share that because you don't need to see it. And I don't mean that in a bad way, like, oh, you don't deserve this. I don't hide things. Okay. I just showed you every entry and every exit on 4 trades we did the end of last week. It's not me saying, oh, let me not teach this to you because you have to join POP. Do I want you to join POP? Of course I do. Of course I do. Do I think POP is helpful? Yeah, no kidding. Without a doubt. Number one subscribe program we have is Power Option Plays in the company. There's a reason for it. All right. It looks like Andrew dropped a link in there. Thanks, Andrew. I appreciate that. Let's see. Diane said, oh, so awesome. Yeah, no, Diane, it is. It's pretty cool. I aired it. I showed it this week in our Inner Circle meeting, which was our full day quarterly check-in, right? Last one for the year of our quarterly. We still do our monthly meetings, but our quarterly. And then I'm going to follow up with something that we did, some advanced fib stuff that I haven't shown anywhere. I'm going to follow it up next Monday. But so Les said, how much do you need to have in your account to be in POP? Les, it's not okay. So here's the thing I want to make abundantly clear. Guys, I'm going to stop sharing my screen for a sec. So you're just going to get this blank thing. Because it's going to start on the screen. So let me start up TradeStation. I just tend to stay away from keeping it on when I'm teaching with Zoom and real-time data coming in on Omega charts because it just gets can get a little wiggy. All right, so I'm logged in. So let me do this now. Let me share it again. Okay, so you'll see my screen in a sec. So it's not that you need a lot of money to trade these less. What it comes down to is there will be stocks on the POP list that you won't trade. Well, let me rephrase that. With a smaller account, you won't trade. All right, so if we sort this by closing price, right? You got so let's say you chose to say, you know what, I don't want anything that's over $600, right? So 14 minus 212. So actually, let's say you don't want anything over 500, right? That right there, Tesla would be the last one that you would be able to trade. The first, the top ones right here. Okay. Oh, actually, that's 11 stocks because only one above it, which is no, that's 11. Yeah, so this is 10. So you got 10 stocks here that are under $500 less, right? So if and what you would do then is you would go find your own 5 or 10 more to add to your list, which I show you how. There's training set for that in Pop. Okay. So let's start with an Amazon. All right. I'm guessing we've got a screen that's working now. We're loaded. Let's go get an option chain. And something happened with my trade station a few weeks ago, and I have not went back and rebuilt everything again. So it takes a minute. Amazon. We have detected that data being used as delayed. Why would my data be delayed? All right, let me take a screenshot of that. My data is not delayed because I pay for real data. TradeStation, that's my biggest problem with them is that they charge for the data where you go to a TOS and the data is free. I already have real-time data, so I'm paying for it. I don't know what happened. Okay, we got nothing on the options chain. Interesting. I have no options data at all. Let's try it again. Let me do this. Let's change it to Amazon here. All right. I'm trying to show the pricing for it. But less, many traders are working with smaller accounts of $2,000 and $5,000 inside of Pop. There we go. I don't know why that message came up. It might have just been a delay in. No, the data just went away. We had numbers there. Now they're gone. That's interesting. I don't know. I can't show it, but which is why I hate having this thing open when we teach. So you do not need large sums of money. Yeah, Halloween haunts, exactly. You do not need large sums of money less to do this. The great thing is there is if you subscribe to the quarterly subscription, there's a 2-week trial. 2 weeks, you're not charged anything. 2 weeks, you're going to get the emails every week, twice a week, with all of the videos and the action plan in it, what you're going to look to trade tomorrow in the next couple of days. You don't have to worry about it. If after the 2 weeks it's not for you, that's fine. You just send us an email, call us, however you want to do it, and say, hey, I'd like to cancel subscription. No harm, no foul. We take it away, but that's not normally what happens. People get into this training and they're all over it. Right. So Les, I'm thinking if you're in more than one trade. So remember, Les, now it comes down to, can you do more than 3 intraday trades in a 5-day period because of the pattern day trader rule, which they're trying to get rid of, but it's still here. So if you have less than $25,000 in an account and you do more than 3 intraday trades in a 5-day period, then you're stopped and you can't do it. You can't enter any more trades at that point. But you look at an Amazon, listen, somebody pull up an option chain, give me a 65 to 85 delta closest to 65 that expires this Friday on Amazon for a call. Someone tell me what the cost. I need that 65 to 85 delta though. Don't worry about open interest or any of that. Just, it's going to be fine. Just look an option up for me that has that kind of data that we're looking for, and let's see what it actually goes for the option on that. And now it is Amazon. It's a volatile company. We do have a lot of announcements coming out, a lot of fear of markets and so forth. Like I said, TradeStation, Zoom, and real-time data on Omega charts is an absolute bear on the system. But if anybody can pull that up, I would appreciate that. Jim, I'll take a look at it. Jim said on the S&P. So 1170. So to do one contract less is $1,200. Let's call it. Now it's Monday. What strike was that trip? 220 call. Thank you. So that was a 220 call, right? It's $12. All right. So you're $7 out of the money, $7 of intrinsic, 68 delta. Thanks for that again, Trip. So it's not like you're getting this exorbitant cost. If you've got enough to do $1,200, that's one trade. If you've got a $5,000 account, you could legitimately do four trades the exact same at one time. I wouldn't suggest that, but you could, right? So you could easily add a second trade to that with a 5,000, 10,000, $20,000 account. So I hope that answers it for you. And for all of you, you don't need to do a lot. I'm looking to do one, maybe two trades a day. That's it. Yeah, that's in a margin account, Brenda. Without a margin account, you have different rules. Exactly. Um, all right. I'll look at the S&P in a sec there, Jim, because that's on our list, right? So we'll take a look at that. But that's good info, good insight there. All right. I don't need pop. We can get rid of that. Okay. Jim said the November 7th Amazon 220 call, 1275, Delta 66, open interest 6,600. So there you go. All right. So 1,200, 1,300, somewhere in that range is what cost is for it right now. And then that's why for everybody, that's why you stay away from the higher price stocks. One of the things I teach in there is I want 15 to 20 stocks on your list. Should never have less than 15, in my opinion. That's my opinion. Because with 15, with 20, you should find 2 to 3 potential trades every day. Doesn't mean it's going to move your direction, but the setup is there that this is a potential for tomorrow. Barring, here, this big gap up today, tomorrow everything is going to be off. Tonight, when I do the analysis, everything is off. We had too big of a gap. Nothing catches up. Moving averages are not near any setups. So we're taking very aggressive entries to take the entries. And when I say very aggressive, we don't have any ones. We've got all twos and threes on our rank, which is all based on where the stock lies in relation to the Fibonacci levels, moving averages, and so forth. Okay. So you want to have 20 on your list. That's my opinion. That should be what your list is 20. You take the 10 or 8 or 12 that you like from here. You go find the rest to make it up on your own, which again, I show you how to do that in Pop. And now, and we do that every quarter. We reanalyze our portfolio every quarter to see if there's stocks we don't want to have on them any longer. Okay. I don't know if I saw it, Brenda. Let me see. Oh, I did see it. I did get it, I should say. Um, just get rid of all of this. So this was Brenda's trade from today. I haven't even looked at it, guys. I have no idea what it says. All she wrote is, "This is a weird one." All right. Oh, you did stock? Yeah, that's like millions of dollars, Brenda. That's like crazy. Um, she said I was late today because I was trying to get Tosh to explain it, to get them to explain it to her. So I don't know exactly what happened here, but she wound up with stock today instead of the options, minus 10,000 shares. So short 10,000 shares. That's not a place I want you guys to be, right? Um, yeah, so this was just so you sold short. You're not out of it. Okay. Wow. Yeah. You don't want to be there, folks, at all. That's why Brenda was on with Tosh trying to figure out what it is. Why? Yeah, I have no idea how it happened. Well, yeah, you definitely want to make sure that doesn't repeat itself. For sure. All right. Economic reports. Let's go take a look see. I got to pull it up for another screen. Forex factory. Let's see. So nothing today. Tomorrow they are orange reports. Richmond manufacturing comes out when the market's open. Consumer confidence, we don't know. It's tentative. We're starting to see the effects. I know there were potential cancellations today were 260, I think, and late flights were 560, something like that, five something, all based on TSA not showing up, which is going to happen. If I'm working for TSA and I'm not getting paid right then and there, I'm going to go work for my brother-in-law today who owns a roofing company, and I'll get $300 cash to go work for him. And I can't worry about the airplanes because I got to buy food. So I fully get it. I mean, we planned a lot of extra time when we went down to Georgia, to Savannah, for the wedding we attended because of TSA. We were very concerned about that. And air traffic controllers, all the same. But so tomorrow, 10 o'clock, pending home sales. I don't know good, bad, or indifferent. It is orange. I think we might start to see some tick up in that, so that could be interesting. Grant Cardone recently came out. He's a self-made billionaire with a B. Recently came out and said that um, he believes interest rates. He said we'll go to ultimately to zero, which were like 3.5 or 4% to him. That was zero. In other words, you're getting money for free at that price. It's nothing. It's dirt cheap. I don't know if we get down to 3.5. Could we get to 4.5? Possibly. And I know, Trip and I definitely differ on opinions or have different reasons why we want to or not want to see it happen. But Grant Cardone professes, in his opinion, it will. And here's his thing, guys. In 5 years, he feels that rents across the country will double. Will double. So that'll be interesting to see where that all goes. Um, but then tomorrow will be a lighter volume day because of the Fed. So it's already baked in. Last I looked, it was almost 99% that we're going to have a quarter point drop. I don't believe for a second we're getting a half point drop. What we're looking for is you'll hear the statement, and there'll be some notes in that statement on what the Fed thinks. Most importantly to me is going to be the press conference. That is where the reporters get to ask the questions the way they want it instead of listening to a pre-made statement that AI has read over 75 times already to make sure they weren't saying things that were making them look in a bad light, or they were skirting around the question with the way they answered it in a very political answer. If we start hearing things such as, yes, we are going to see another rate drop, which we're expecting for December. There is none in November. I'm expecting to see one in December. But if we start hearing not just it's going to go down, but we may have to consider a half point cut this year, or you hear them say we might have to consider a full 1 point this year, and they dropped a quarter already, or was it a month ago? They drop a quarter tomorrow, or Wednesday rather. Sorry, and then there's only one left, so it would have to be a half point on that last one. Is what they'd be shooting towards. So whatever, you're going to see some volatility around there. I would highly recommend every single one of you trade that 2 o'clock, 2:30 announcement on with non-funded trades. And why I'm telling you that is it's going to be a wicked event potentially, and you'll get some great experience in dealing in those events. So if you've got an opportunity to trade it with day trades, with the paper trades, and they would be day, I wouldn't bother overnight. They would be day trades. Jim said, with the government shutdown, will the FOMC statement be released? Yeah, the FOMC is working, so I'm pretty sure it's going to be. I don't think that would become tentative because that's coming right from the Fed itself. Trip said, I want to see 25 points on Wednesday, then nothing in December, then 25 in January and March. And I'm not saying that would be a bad thing, Trip. And there are enough Fed members that have come out though and said they think we need a half point, we need 3/4 point this year. So I think it's already baked in, but we'll see the answer come tomorrow. I keep saying tomorrow, come Wednesday. We'll see the answer come Wednesday. We'll know where it is or isn't headed, based on what we see there. But my thought is we're going to see quarter, three-quarter point drop this month is what I think. So, all right. And then the end of the week, we got nothing else then. Nothing Thursday, Friday, and then we go back to next week. So, but this line here is every day we see this. Government data may be impacted by the shutdown. Tentative events are subject to delay, revision, or cancellation, or inaccuracy. Inaccuracy. So Jim said CME shows quarter point drop, 97.8%. Is that for this month or for December, Jim? This month, yeah. I knew it was like 98 and change. Now it's 97 and change. We're up there. And then the other 2.5% is, hold steady. There's nothing, at least there wasn't anything on half point drop. So, all right. Let's go back. Let's go look at the market. And that's where I want to bring Jim had made a comment in there earlier. I said I'd come back to it and we'll talk about it. So, Let's do that. So S&P 500, ho, 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 ho. Look at that move, folks. So if you follow along with my weekend update, my Sunday report and the Traders Market Intelligence report, right? And you go back a week ago, which would have been the previous Friday's close, that would be here, right? Look at how far we've come from not this Friday that just passed, from the week before. Look at how much we've moved. We were barely in a bullish territory, rank of three. We gapped up the next day, that Monday, and we ran. Good day, right? Doji the next day, not surprising to see it. And again, you see all of these in pop when I talk about it. Not surprising to see that level of hesitation there. It's like, whoo, man, I'm tired after the previous day. The next day, we opened flat and just crashed. Broke all the way down through both moving averages, came back, closed at a rank of one. Well, when we were moving and grooving in here, and the market's taken off and so forth, and we get this happening, this is all me talking about I need a pullback. I need a pullback or a breakout, but ideally I want the pullback. And you could not have had a better pullback than this. We opened on this day right at support, right there. I mean, if we take we leave this black day on, the black candle day on is the last day. Look at where the moving average is. It's a rank of one. It's a bullish bias. Everything is perfect. We open up the next day. We open just a little higher than we were, barely, but slightly. We pull back right to the fib line. We bounce. Boom. There's your entry. Where's the target? 67.65, right there. The super fib, right? And then what? And we gap up. We break through the 67.65. We break through the 67.78 level, which is our ABC fib. We break through the negative 272. I don't know the level of it. I can't really see it. Let's see. 67.92, maybe, give or take. We break through there. We'll just bring it current now so we can see it. 67.92. We close right there. We gap up today and we take off. Guys, this setup right here, I told you it's the place to go long. I made it in pop. I made it abundantly clear this is the place to go long. Right? If we can get that kind of pullback and bounce, you need to be in. You know, people get confused. Rob, I'm trading a long time. The stuff that's in pop, I already understand the system, the strategy. Does it really value me in any way to have something like that? What you miss, what people miss out on, is it's not just this is what we're looking for tomorrow. Yeah, you get that, right? It's the insights that gets brought there of what I see, and I'm talking out loud, that if I'm trading on my own and I never talk to anybody else, which I talk to dozens of people a week about the market, and I'm talking about professional traders as well, other people that own other stock market education companies, people in my mastermind groups, other traders that I know, constant conversation. So I have a host of data coming at me that most people will never get access to. Is it because I'm better? No, it has nothing to do with that. It's not what you know, it's who you know, right? It's the conversations that are being had. And it's not that it's behind closed doors. It's just at a higher level of what we're looking at, right? So if you're sitting there now, most traders are going to sit on their hands and either A, sit on their hands and do nothing, or B, they're going to take the next gap up. But right now, is that a smart thing to do, to take that next gap up? I don't know. We're at a rank of three right now, bullish rank of three. What's the next gap look like? Are we having less volume? Is it a failure gap? Right? And that was it. It's a head fake. And we start to put, just saying I'm going to take the next day because it goes up is a mistake. Just saying I'm going to buy Bitcoin just because it went down is a mistake. Right? There are reasons, levels, and so forth that we look for, or any stock or any method to enter. But was there an opportunity on SPY to enter when the stock was at 6,700? Amen, brother. There sure was. And now we're at 6,850. You're $150 move on the S&P. If we look at SPY, we're talking about 667 to 680. So it 683. So we're 15-point move. If you've got a $15 move on the stock price and you bought a 0.7 delta with a $15 move, you're probably looking at a 0.85 at this point times 0.85, right? You're almost $13 up on your options price. in how many days? That bounce came in right here. So in 3 trading days, and today's not over, in 3 trading days, right? That was the place. Was when this broke up above here, we got to bullish. Was that the place? No. We had a swing high up in here that we were looking at. And that was our target. Did we get to it? No. We closed and we gapped right through it. You're filled here if you took that trade, right? We gapped up again. There's a lot of opportunity here, a lot of opportunity. But it really comes down to how well do you read the charts? How well are you, or how good are you at looking left and determining what's going on over there? How good are you at projecting forward into the future and determining the where and the why, the ABC patterns and so forth? That's to me what having someone like myself or Brandon or Trip in your corner to answer some of those questions of what they see. All right, so Jim, you said on the S&P, if you add the -5 fib, okay, do we need it? Let's see that first. 68.30, 69.08. We'll call it 69.10. So that's 80 points in there. We definitely don't need it. So now Jim said if you add it, and we had a fairly in-depth conversation about adding fibbits when you don't need them this weekend. And then Jim said today's candle is approaching this fib line like it closed at the -272 line on Friday. So what Jim is saying is by putting this line in here of 68.69, we've got a target of where the S&P can be shooting for today. I like it, Jim. And it's funny. When we had our meeting over the weekend, Friday and Saturday with Inner Circle, Trip talks about, I don't put my my 236, my -136 and my 118. I don't put them in unless we need them. Trip puts them in and automatically and takes them out if he doesn't need them, right? And then sometimes he'll leave one in even though it's close, maybe not quite there, but he'll leave it in anyway, and I'll do the same thing. But that's bottom line. And I made a comment there that said it doesn't matter if you need the fib or not. It's a point of hesitation between every two Fibonacci levels. Period. The end. Forever. Now, I'm not talking about we don't really need the 50, but if we split this again to another one we don't need, we use that. Now we're getting crazy. But if I've got my major fib lines like this, and I have a level that belongs there, I just don't need it right now, then and I add it, that becomes a potential target for the market to move to. So I'm with you there, Jim. Absolutely. I love it. Good catch on that. Good insight. Let me go back to the other comments. All right. Okay. That was my point for the -50 fib line. Gotcha. Okay. Show the SPY again, Brenda? Absolutely. Yeah. By the way, the entry was on this day here. Yeah, SPX might be setting up for a 3-gap move. So I don't think I have it open. I don't. I know I don't. I closed a bunch of stuff down before. If you have access to gap stats, guys, what I would encourage you to do is go in there and there's a ton of trainings inside the members area on various types of gaps and how we trade them. Go in there and go through those trainings. Right? Go through those trainings. They are critical to what's happening right now. And it's not, well, Rob, why don't you just tell us what it is? Guys, keep in mind that, it's hours worth of, it's hours worth of trainings in there. Right? If we go inside the Magical Mystery Tour, right? Foundation videos, right? Look at all of it. So, gap and options, gap options pricing, gap filled, pivot points and gaps, gap order entry, Fibonacci gap, gaps that don't fill, gap trading stat. I mean, there's a lot in here on how to trade the gap. That's what this whole training is all about, right? And then when you combine with it, what the gap stats gives you it's a tremendous value in there. But this is the SPY, Brendan. We've got it drawn from September 2nd. I don't remember if it's whatever is higher, this 22nd or 23rd. 34. Yeah, so it's the 23rd. We're a few pennies higher on that dark candle, right? Jim said, yeah, the S&P might be set up for a three gap move. It's very possible. Yeah, it's very possible. Listen, I'll take it because I own SPY, a lot of it in multiple accounts, right? Long term. It's long term stuff for me. It isn't trading, it's investing, right? It's the equivalent of my mutual funds, right? Or how I don't trade mutual funds or invest in mutual funds. So this is how I build a mutual fund with Qs, um, SPY. It could be gold, IWM. It could be Berkshire Hathaway, which has had phenomenal returns to it on their price. B, not A, by the way. I'm not spending $500,000 on one share of stock. Okay. All right. Let's go back into presentation mode. All right, so we got a lot happening this week. 27th tonight is Inner Circle. November 3rd, for those of you that are in Inner Circle, I will be teaching that one. We're going to go over some of the fib stuff we did yesterday. Today's no, Saturday. On Saturday, Mastermind is tomorrow. Monster Market Movers is the 29th. Patterns in a Flash is next week. Pop, Covered Call, E-mini are all on regular schedule. Power Hour and Trading Coaches Playbook as well. And then we've got Futures Trading Simplify with Brandon. Don't miss out on that one, guys. There's only 2 left. He's already done 2. Do you need to go to all of them? Nope. They're fairly similar. They're going to be pretty much the same presentation. But if you saw one and you think there's something you'd like to catch again, by all means, go back and watch it. The next one. That's fine. But those are coming up on the 29th and the 30th, which is this week. Okay. So go ahead and check those out. I will tell you right now, there's a couple of things that are going to be on the docket at some point. We will have an AI and trading event. We did an exercise, although we're not going to do that full exercise, but we did an exercise over the weekend with Inner Circle where they had to answer a series of questions, taught them how to upload it and train their AI on who they are as a trader, and then laid out a whole series of things to ask it on you and how to fix your trading system and so forth. But we are going to do something on AI and trading. And then for those that are in Inner Circle, any one of our masterminds, Inner Circle, Mastermind Group, and Trading You, so all of our masterminds, including the mini mastermind, we are going to do a live training on health. And what I mean on health, there are things that you can do from a standpoint of obviously making yourself healthier, but there are things you can do from a standpoint of making yourself a better trader that are related to that. Stuff that I do, that I've invested tens and tens of thousands of dollars into figuring out. So I'll share some very inexpensive methods and things like that and cheats that cost you absolutely nothing to do. But that'll be coming up. Those both will be coming up shortly. All right. There's Brandon's training. Weekly training topic, the Fed and rate cut number 2. Now, we talked a lot about this already, folks, but I really do believe that for me, I will not be doing anything Wednesday morning at all. I will not be doing anything before the market, before the Fed announcement and press conference come out. And even there, depending upon what happens to options pricing, I won't be doing anything there either. So there's a very good chance that Wednesday becomes a day off and go do something else type thing. I will be around when the announcement comes out. I definitely want to and need to see what happens there. And I think it's important if you're around that you watch CNBC and watch Powell talk and watch on your charts. For me, I'm facing my computer right now. My television is 45-degree angle over my left shoulder. So behind me to my left, okay? And I don't watch it, I listen to it. And I don't even listen to it. My brain is conditioned to listen for oopses. Wait, what did he just say? There was a plane crash? What airline was it? There was a war. What country was it? There was an embezzlement. What company was it? Right? I hear things that are not normal. Right? I don't care about the fighting between the hosts on CNBC and all that stuff. That I don't care. The attitudes and all that garbage. I'm concerned with what's happening. And so I'll be listening to it without really paying attention to it, listening for the anomalies of, oh, wait, what did they just say? Yeah, Tripp said, watch for a move at 2 p.m. and an opposite move at 2:30 happens a good bit of time with the FOMC announcement. Exactly. right? So you'll see the move up, the move back down, the move back up, the move back. You've got to watch it, but it's important that you step out there and watch these things if you can. If not, set your DVR if you have it to record that from 225 until 240 on CNBC or something, and just record what or actually that's not true. Go from 2 o'clock until 3 o'clock, let's say, and then you can go back and watch it later on in the day, right? It can be a very interesting exercise to see how the market moves if you never watch it on a Fed announcement. All right. So I'm backing off on Wednesday, but I'm still back. I'm still down to day trades on most of my trades. I go back and analyze how well we've done on swing trades, and we've done okay. We've done okay with them, but of over 300 trades, we didn't have even 30 of them that were swing trades this year. Not even 10%, not even 5%, I don't think. It might have been more like 2 or 3% of our trades. It's more of, okay, let's see if we can't finally get back into day swing trades. Oh, yeah, it kind of worked, but now we'll stick with day trades. We go back again, we test it again. Yeah, not really. Go back. So right now, this market is very much conditioned towards that. There's just too many newsy things out there right now that are affecting what happens with it. So day trades, without a doubt, is me. But I am watching to see what happens there. I just don't see myself trading on Wednesday unless it's after the 2:30 announcement. And when I say 2:30, I'm not going to trade the announcement. I would trade after the open mouth insert foot with Powell. All right, the stocks that you want to take a look at. So what are they? Dennis already dropped one in. He's dropped in Intel. Drop in the companies you want to take a look at, folks. I'll be more than happy to analyze any stock that you drop in there. Give you my honest opinion, yay or nay, like or no like. Why do we freeze? That's Trade Station, I'm sure. Yeah, Jim said, then after you watch the recording, figure out what time Powell said something and what did the candles do at the time, bullish or bearish candles on this statement. Yeah, so we just froze, guys. My Omega charts froze. It didn't like that I switched. Let me shut this down for a second. It didn't like that I switched to a different watch list. That's all because I put Trade Station on. Let me shut this down and bring it back up. So just bear with me while we do. All right, let's put Omega charts back up. Get started. Yeah, and hopefully you can if you can get your DVR to a certain time, you can go to a toss and you can back up to a certain time and do a replay, I think. I know you can on Omega charts too. All right, so let's go ahead. Let's try this first. All right, let's do that and that. Here we go. Let's try going back to real time. And let's see if we can't get it to connect. Gold's a good one. All right, so Intel. So Intel's had a nice move after the government involvement, right? The fib itself is shot at this point after that gap down, which I think was an earnings gap that they took. Our current situation is not pretty. So I've got a V bottom in here. This is all good sideways stuff. We got this move up and pull back, move up and pull back, move up. Yuck. Right? I do not have a pretty place to draw from anywhere. Anywhere. So if I come back from this swing low, and go here, we're already at the negative 618. Right? So whatever you're looking for here. So here's my biggest problem. Even if I drew this all the way to the top up here, well, it's not that bad actually if I do that. I've got $3 26.86. I've got $2.50 here between the 50 and the 618. That's too small for me. I need at least $3. We come off of this high here, 50 and 618. I get a buck and a half. By the time I bounce off support, enter the trade, get out before resistance, what am I making? Stock backs off to here and bounces. I take the trade here, I exit the trade here. Maybe I get 50 cents, 75 cents, maybe if I'm lucky, $1. It's not enough. I need more room. So check that 5618 distance. But where it is, Dennis, if we get the pullback to the moving average, I'd love to see it. We moved up already once to this negative 618. We did it again today. Great structure, great setup. But if you're looking for a new entry, either pull back to the 8 and bounce or break above the 4067, retest and bounce, and the trade gets taken there. Let's see. Then we've got gold, GLD, which was Brenda. Oh, I didn't see that trip until just now. Sorry. So GLD, big gap down. Holy mackerel. Okay, so we're down at 365.82. And that's all of the positive news in the market. Looks like we're going to continue to run. Flight to safety starts to go away. We're in a neutral bias right now, rank of 2. But I don't want anything personally until we get above 380. Now, can I take a bearish trade down to 354? Yes. I got a clear and concise entry if it breaks the 365.82, retests and fails. I got that 354.25 as a clear support level. So I do like that, Brenda. SPY. We're in the middle of nowhere. I got to get the pull back to the 679, so 680 we'll call it. But here's what I'd love to see happen. And then we fail. Then we pull back. If we go sideways a little bit with these two gaps, it'll give moving average a time to catch up. Right? So if we give it some time to catch up, then we get to pull back to the 680 level and bounce. Now I like the trade. But just as it stands there, not at all. Not at all. Brendan said, I'd like to see the gaps filled. Yeah, and that may happen. That may happen. We wouldn't get down to a gap fill if it came to the 680. But if we're going to keep this rocking and rolling going right now, we might not see that gap fill right now. This may come around as the markets start to fail later on. Right? We get a 10% pullback, a 20% correction somewhere. Right? That's my bigger concern, is not the word, but thought. That if we do truly continue to run, so if Trump and China do settle the tariff concerns, a big part of that goes away. Big tick, big check mark of fear, right? If Russia, Ukraine settles, big check mark for overall fear, right? Whatever the other latest and greatest concerns are that people have, right? If we can get the government open back up, big check mark of fear. Right? We'll see. I mean, all these people that are waiting on SNAP benefits right now, well, hopefully the government comes up with something to try to fund that in the meantime, that people are not sitting without food. But all of these things lean into it, right? So if any of those become major issues, then Brenda, yeah, we could see that gap fill pretty quick. If they don't, and we keep running strong, I don't see anything to slow us down just yet. Right? So if we look, let's go back to the S&P for a second. No other symbols in there, but I do have a moment to look at the S&P again. So our 618, we blew through. We closed just above it on Friday. And today, our gap up puts us one step away from 69.08. Actually, we're talking 40 points. The S&P moves 70 points a day. We could make this move up to 69.08 tomorrow. If we get a normal day, without gaps, we can make it up there. Right, we're at 68.60, 69.08. It's a 50-point move. Again, we moved 70. 143 is our pivot, 144. So that one is critical. Where is the one measured from? The distance from where the fib started to where the fib ended, extrapolated out from the pullback, and that low, the lowest low that came in on that pullback, up to this green line, which is our 100% level. So this move was 100%, whatever it was. Now the same thing is happening right here. This is the same 100% move inside of here. So if this was a 900 points, I don't know what it was. I'm making it up. If it was 900, that means this would be 900. Right? If we actually want to measure it, you use the dollar difference tool. Come in here off of that A level at A point. 340. And then from C up to this line here. 337, it's the same 340, right? I'm not 100% accurate with them. I don't need to be. You get the idea. So that's 100%. That's the stacking method that I employ, right? And it works abundantly well. All right. So, folks, listen, there's a lot of links that Andrew dropped in there. You guys asked a lot of questions that led back to other things. Go ahead and check them out, right? Click on those links, get in Brandon's class, check out some of what we do in Pop. Those that are in Pop, like I said, we've got the one thing we're working on right now. It's not ready yet, the new Pop beta that we're in. But you'll like the name of it, by the way. Sean named it Poppy, Poppy, as her name. So it's our Poppy AI. But we're trying to incorporate delayed data into there that you'll be able to ask questions about your stocks and where the fibs are, and if any of the setups are looking like, on any of the stocks that we have in our list, if any of the setups come in there, any stock you put in, if the setup is there. That's what we're trying to do right now. So, all right, everybody. Hey, have a great rest of your day. And I will see all of you at our next update. We'll keep the screens open for a little bit. So you can go ahead and click on those links. But if not, or if you're headed out, have a great one, folks, and I will see you all soon.